What's happening, tech fans, and welcome back to Qualcomm Pulse. The news cycle is moving at lightning speed, and if you're not plugged in, you're missing out on the biggest stories shaping our world. Today, we've got a packed show that you absolutely cannot afford to miss. We're diving deep into the markets, uncovering major shifts in the tech landscape, and bringing you the insights that matter. Get ready for a high-octane update that'll keep you ahead of the curve. We've got a lot to cover, so buckle up and let's get right into it. First up, the financial markets are buzzing with activity. We're talking about major stock movements, economic indicators that are surprising everyone, and the ongoing drama that's keeping analysts on the edge of their seats. You'll want to hear what's shaking up Wall Street. Then, we're shifting gears to the future of energy, where a massive investment is being made in a technology that promises to change everything. Think groundbreaking research and the big players backing it. You won't believe who's putting their money on the line for this game changer. Next, we're going to explore a fascinating trend in consumer behavior and how one company is absolutely crushing it, defying expectations and setting new records. This is the kind of story that shows how innovation and smart strategy pay off. And finally, we're pulling back the curtain on a tech giant's sales strategy, revealing just how concentrated their success really is. The numbers might surprise you, and it raises some big questions about their future. All that and more, right here on Qualcomm Pulse. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Stock surge as economy shows resilience, Nvidia earnings digest. Wall Street experienced a broad-based rally on Thursday, with major stock indexes posting gains as investors processed encouraging economic data and the latest corporate earnings reports. The Nasdaq Composite led the charge, closing near a record high, while the S&P 500 surpassed the significant 6,500 level for the first time, marking its second consecutive day of all-time highs. The Dow Jones Industrial Average also saw a modest increase, securing its own record close. This positive market sentiment was buoyed by a surprisingly strong government report indicating that U.S. GDP grew at a 3.3% annualized pace in the second quarter, a notable upward revision from initial estimates. This robust growth was attributed to a decrease in imports, which had surged in the first quarter to preemptively counter tariffs, and a healthy uptick in consumer spending. Compounding the positive economic news, weekly jobless claims fell, signaling continued low layoff rates. Adding another layer of complexity to the market's narrative, a legal challenge emerged as Federal Reserve Governor Lisa Cook filed a lawsuit against President Trump, the Board of Governors of the Federal Reserve System, and Fed Chair Jerome Powell. The lawsuit centers on allegations that the president's attempt to terminate her position unlawfully denied her due process. While this development introduced a note of caution regarding the Federal Reserve's independence, the market's reaction appeared relatively muted, with volatility indexes remaining low. Meanwhile, the market continued to digest Nvidia's earnings report, which was closely watched as a barometer for the broader artificial intelligence sector. Despite beating earnings expectations, Nvidia's shares experienced some fluctuations. The chipmaker's data center sales came in slightly below analyst forecasts, and ongoing uncertainties regarding its business in China cast a shadow. However, Nvidia's CEO Jensen Huang expressed confidence in the demand for the company's AI chips, particularly the Blackwell AI GPUs, emphasizing strong demand and the company's efforts to re-engage with the Chinese market following a temporary export ban. The company's gaming division also reported record revenue, up 49% year-over-year, demonstrating continued strength in its foundational business. Other notable market movements included a pullback in Ethereum, which fell below $4,500 after a recent rally, and continued strength in gold. The market is now looking ahead to Friday's release of the July Personal Consumption Expenditures, PCE, price index, a key inflation indicator closely monitored by the Federal Reserve. But what does this economic resilience mean for your investments? Stay with us as we break down the implications of these market-moving events, and then we'll explore a monumental investment in the future of energy. Fusion power breakthrough. Commonwealth Fusion Systems secures $863 million in landmark funding round. In a significant development for the future of clean energy, fusion power startup Commonwealth Fusion Systems, CFS, has announced a massive $863 million funding round. This substantial investment, one of the largest ever for a fusion company, was backed by a diverse and high-profile group of investors, including tech giants like Nvidia and Google, alongside venture capital firms and strategic partners such as Breakthrough Energy Ventures and Emerson Collective. This capital infusion marks a pivotal moment for CFS, propelling its mission to commercialize fusion energy forward. CFS, based in Massachusetts, has now raised nearly $3 billion in total funding, underscoring the growing confidence in fusion technology as a viable and potentially limitless energy source. The company's co-founder and CEO, Bob Mumgard, emphasized that this funding is not just about advancing fusion research, but about transforming it into a commercial industrial endeavor. The recent surge in investor interest is largely attributed to advancements in computing and AI, which have accelerated research and development in the sector, making previously theoretical concepts more attainable. The core of CFS's technology lies in its innovative approach to harnessing fusion power. Fusion reactions occur when atoms are compressed and heated to extreme temperatures, forming a plasma state where atomic nuclei can fuse, releasing vast amounts of energy. CFS is currently constructing its prototype reactor, Spark, in the Boston suburbs, with operations expected to commence next year. Spark is designed to achieve scientific break-even by 2027, a critical milestone where the fusion reaction generates more energy than is consumed to initiate it. While Spark is not intended for commercial power generation, it is crucial for validating CFS's technology and understanding the complex physics involved. As one expert noted, new devices can reveal unexpected plasma regimes, highlighting the ongoing nature of scientific discovery in this field. Assuming Spark performs as expected, CFS plans to begin construction on its commercial-scale power plant, ARC, in Virginia between 2027 and 2028. Both Spark and ARC utilize tokamak designs, which employ powerful superconducting magnets to contain and compress the plasma. While the tokamak concept is well established in fusion research, the practical application and performance remain key questions that investors are keen to see answered. The extensive list of investors in this Series B2 round, which includes both existing backers increasing their stakes and new strategic partners, provides CFS with a broad network of support. Notably, Google has already committed to purchasing 200 megawatts of power from the future ARC plant, signaling strong industry buy-in. While the initial cost of ARC is expected to be high due to its pioneering nature, CFS is focused on understanding and refining these costs through the Spark project. The company acknowledges that the new funding will advance Spark, but will not be sufficient to build ARC, which will require several $billion more. The path to financing ARC remains open, with CFS and its investors committed to seeing the project through. This massive backing for fusion power signals a major shift in energy investment. Now, let's pivot to how a different kind of consumer spending is hitting record highs, and what it means for the companies involved. Build-A-Bear Workshop roars ahead with record revenue and raised full-year guidance. Build-A-Bear Workshop, the beloved experiential retailer, is defying market trends and delivering stellar results, with its stock climbing following a second-quarter earnings report that surpassed Wall Street expectations. The company announced record revenue and raised its full-year guidance, painting a picture of robust growth and strategic success in a challenging economic climate. This performance highlights the enduring appeal of its unique, hands-on brand experience. In the second quarter, Build-A-Bear reported revenue of $124.2 million, an impressive 11.1% increase year-over-year and a new company record. This figure exceeded the consensus estimate of $116 million, demonstrating strong consumer demand for its customizable plush toys and interactive store experiences. The company also posted adjusted earnings per share of 94 cents, significantly outperforming the forecasted 69 cents. This financial strength is a testament to the company's focus on monetizing its unique market position, its multi-generational appeal, and its strong brand recognition. CEO and President Sharon Price John attributed the company's exceptional start to the year to a long-term strategy focused on innovation across three key pillars. This strategic approach has enabled Build-A-Bear to scale its business effectively, even amidst widespread economic challenges and geopolitical shifts. The company's ability to maintain this momentum is a significant confidence booster for its team, brand, and future plans. Looking ahead, Build-A-Bear has increased its fiscal year 2025 guidance. The company now anticipates revenue to grow at a mid to high single-digit percentage rate, an upward revision from its previous forecast of a mid-single-digit increase. Furthermore, Build-A-Bear is expanding its physical footprint, with plans to open between 50 to 60 new locations. This expansion strategy, coupled with its strong financial performance, indicates a confident outlook for the company's continued growth. The CEO acknowledged potential economic uncertainties ahead, but expressed confidence in the company's trajectory, deeming it appropriate to raise guidance at this juncture. The strong results and positive outlook suggest that Build-A-Bear's focus on experiential retail and brand loyalty is resonating strongly with consumers, positioning it for sustained success. It's clear that unique retail experiences are in demand. Next, we're going to look under the hood at a tech titan's sales and discover just how concentrated its incredible success really is. Nvidia's AI dominance, revenue heavily reliant on just three major customers. Nvidia, the undisputed leader in AI hardware, revealed in its second quarter earnings report a striking concentration of its revenue, with over half of its direct AI hardware sales coming from just three unnamed corporate clients. This revelation sheds light on the immense demand for Nvidia's cutting-edge GPUs, which are the backbone of the global AI revolution, while also raising questions about the sustainability of such a concentrated business model. Nvidia's compute and networking segment, which encompasses its data center products, generated a staggering $41.3 billion in revenue for the second quarter, marking a substantial 56% increase year-over-year. This performance underscores Nvidia's pivotal role as the primary supplier of the pickaxes in the ongoing AI gold rush, as data centers worldwide race to scale up their capabilities. The company's GPUs are essential for powering the massive computational demands of AI training and inference, making Nvidia a critical partner for virtually every major player in the AI space. The company's 10Q filing detailed that its largest single customer, referred to as Customer A, accounted for 23% of sales in this segment during the quarter, translating to approximately $9.5 billion. While Nvidia does not name its clients, industry speculation strongly suggests that this major customer could be OpenAI, Meta, or potentially xAI. These companies are known to be building some of the largest AI data centers globally. Meta's Hyperion data center project and OpenAI's Stargate initiative, a multi-billion-dollar partnership with Nvidia, Oracle, and SoftBank, are prime examples of the immense scale of these AI infrastructure projects. Given the sheer volume of GPUs required for these endeavors, it is highly probable that Customer A's purchases are destined for these colossal facilities. Customer B and Customer C are also significant revenue contributors, with sales of $6.6 billion and $5.7 billion, respectively, in the second quarter. Collectively, these top three customers represent 53% of Nvidia's compute and networking segment revenue, totaling approximately $21.9 billion. This level of customer concentration highlights the effectiveness of Nvidia's strategy in forging deep relationships with major AI players, enabling efficient sales and distribution. However, this reliance on a few key clients presents potential risks. Should one of these major customers develop in-house chip capabilities, significantly alter their AI infrastructure spending, or simply change their purchasing strategy due to evolving market dynamics or executive decisions, Nvidia's revenue streams could be dramatically impacted. The volatile nature of the tech industry and the ambitious strategies of its leading figures mean that such shifts, while perhaps unlikely in the current AI boom, are not impossible. despite these potential vulnerabilities, the current market demand for Nvidia's chips is exceptionally high. The company is struggling to keep up with production, and demand continues to outstrip supply, suggesting that for the time being, the risks associated with customer concentration are outweighed by the overwhelming market need for its products. This deep dive into Nvidia's customer base reveals the intricate dynamics of the AI hardware market. And now, let's wrap up our show with a rapid-fire recap of today's top stories. And that's a wrap on today's Qualcomm Pulse. We saw the markets rally on strong GDP and Nvidia earnings. Fusion Power is getting a massive boost with new funding. Build-A-Bear is hitting record highs with its unique retail model, and Nvidia's AI sales are heavily concentrated among a few key players. Don't miss out on future updates. Like this video, subscribe to Qualcomm Pulse, ring that notification bell, leave a comment with your thoughts, and follow us on all our social channels.